Hi guys, today I am going to discuss about depreciation. What is the depreciation? This is very important for the accountant, correct? Because the depreciation, all the company they are calculating the depreciation, the assets, okay. This depreciation, this, what is the depreciation first? The depreciation means this value is reducing, correct? The asset value is reducing, that is called depreciation. I am not going to tell the technical this is the depreciation. I am not going to confuse anyone. I am going to tell sharing my working experience, how I am handling the depreciation, how I face the, how I understand the depreciation, okay. You can see this, what is the depreciation? Depreciation, see, reduction of value of assets, okay. This depreciation, this reducing the assets value, okay. Whatever, for example, if today I am going to purchase one car, so what is happening? If I am using, I am not using, if I once it is came out the showroom, once it with me, what is the happening? This automatically it's reducing the price, correct? Like if I am not using also, for example, I bought the car today. I can put it in my the parking like a one month, 2 month. Like I'm not using. Okay, I'm not touch at all. But whatever after 2 3 months, I'm going to sell that car. So nobody going to take the showroom price, correct? If they are going to take with me showroom price, they can go to the showroom, correct? So why they are it's same price? Why they are coming and purchase to me? And the same thing, the depreciation is reducing the assets value. This is the concept, okay. If you understand this concept, you can easily handle the depreciation account, okay. You can see depreciation is the systematic allocation of a depreciable amount of an asset over useful life, okay. This like a useful life. This depreciation means what? Useful life. If we are using the any assets, anything, any machinery, whatever, this is going to decrease the value only. But you can see one thing, land is, we are not going to depreciate because the land, it is increasing the price, correct? Today we are purchasing the land, tomorrow it is not going to decrease, it is increasing the price. That is why we are not calculating land, okay. We are not calculating depreciation in land, correct? You can see except the land, whatever the assets, it's we are going to calculate for the depreciation. Like you can see usage, we are using the the machinery, we are using the vehicles, we are using whatever we are using, this it's going to decrease the value, okay. And the second, the time wear and tear, I already example this, like if we are not using also, if we are not using, it will be take with us 1 month, 2 month, 1 year, 2 year without using. So what is going to happen? So going to reduce the price, that is called depreciation, correct? Using also it's going to depreciation and they reduce the value. If you are not using also, it's going to reduce the value. Out of model, what is the out of model? For example, the iPhone, today I purchase one iPhone 2013. So what is going to happen next year? The 14 will come, correct? Automatically 13 price going to reduce. That is called out of model. Because the same price, like for example, you bought 100,000 mobile iPhone 13, and the next year 14 also coming same rate only, correct? The automatically 13 is going to reduce. Even though if you are not using that phone, you are put it in your cupboard, the wherever, even though it is going to decrease the price only, correct? Like this out of model. And another one, decrease in market value. The same thing, decrease in market value means what? For example, the technology, technical items like laptops, whatever, the next year it's going to decrease the market, it's not going to increase. Like even the car also, this is going to decrease the market. For example, 2014 one car is there, 2015 another car model will come, same company, but some future they change, that means decrease the market value for the old product, correct? This is called decrease depreciation for reduction of assets value. Okay, you can see this example, you can understand easily. Some some material, some machinery, some vehicles, I make it in the example for here. Like you can see this, wherever, if for example in the company, like a factory, whatever machinery they are using, it's going to reduce the, we are going to calculate the depreciation, because it is reducing the machinery value, machine, because this machine is production use, they are using the machine day by day, the value is decreasing. They, whatever they are purchasing 10 million also they purchase the machine, but next day they are started to useful starting the machinery, day by day it is working, correct, they decrease the asset value, the whatever the original value, it is going to decrease. I already, like example, the same thing, the car or motorcycle, like whatever these vehicles, it's normal things, everybody knows about that one, everybody, this, you know, this accounts is like even the accounting guy, non-accounting guy, but they are facing the accountings, they are facing the account model, they are facing the day-to-day life, we are facing account, but we are not thinking about like a accounting guy, they don't know, somebody, they don't know, they are maybe it's some different field, they don't know what is the debit and credit, what is the depreciation, they don't know anything, but they are facing what is the depreciation, debit and credit, because they are purchasing, they are selling, they are purchasing the material, the like vehicles, they are selling after 2-3 years, it is going to reduce the value. They are paying insurance for India, they are paying insurance year by year, that yearly, that based on the vehicle value they are paying for the insurance, that insurance it will be show this year this vehicle is going for this much rate, as per the government value. Okay, that means everybody knows about these things, but nobody think about the accountant model, they only think about the like accountant, because they don't know fundamental, they don't know account, what is the accountant, correct. Why I am telling this much of examples, because this, you can see, like you can think about the out of like box, you can think about out of the box. If some people are there in the accounting, they are doing the study in accounts, or they do whatever, but they are facing very difficult for accounting, some people, I saw some people, but you can see like you can see this is day to day life we are facing, so that means you can understand, correct, you can see the depreciation formula. Now we are going for the technical mode, we are going like accountant, how they are using for the depreciation. So now we are going for the technical mode, correct. You can see depreciation equal to asset into rate of depreciation or useful life. Okay, what is this? Because depreciation amount equal to asset into rate of depreciation means like whatever percentage, for example, as per the government they given this machinery like a 10% like that. Okay, so as per that percentage we are going to calculate the asset value. So whatever amount will come, that is for that year like a depreciation amount. You can see that like a formula, so like an example, they say the plant and machinery they are purchasing 1st February 2021. Okay, purchased amount 1 lakh, correct. Depreciation percentage 15% per as per the government. Okay, so we have to calculate that 1 lakh into 10%. Whatever amount will come, that is we are going to that is for the depreciation amount. Okay, you can see this down, depreciation equal to the like asset value. What is the asset value? 1 lakh into what is the depreciation rate? 15% as per the government, correct. So we got that year 15,000 for the depreciation value. Okay, the same thing you can see how we are going to make the adjustment entry. See the same 15,000, how we are going to make the adjustment entry? Depreciation account, it's the debit 15,000 to plant and machinery account, credit 15,000. That means we are reducing from the machinery. Okay, we are reducing from the machinery original value. Okay, same thing you can see this how we are going to transfer entry to the profit and loss account. So you can see this profit and loss account debit 15,000 to depreciation account, depreciation account credit 15,000. Okay, see profit and loss account, how we are going to make the profit and loss account, when we are after the entry we are going to make the profit and loss account, correct? This is the format. So under the depreciation and maintenance it will go to the depreciation account, whatever that amount 15,000 it's go for that 15,000. Okay, the same thing we are going to see for the next schedule, like next class, how we are going to transfer the balance sheet. Okay, the same amount how we are going to transfer the balance sheet. Okay guys, thank you.